Hey, what's up, guys? This is Kieran from CryptoBuzz. Really happy to have you here with me today on the 9th of August 2019. So, I've got a few interesting articles I'm pretty sure you'll find interesting. So, they help paint a bigger, broader picture on the whole cryptocurrency space. In terms of a safe haven for investors, everyone's talking about people trying to flee the stock markets and maybe going into commodities and also having another alternative. And let's see what the other markets are doing and why it shows that many investors are fleeing from traditional markets and going into different commodity markets such as gold, silver, other metals, and even Bitcoin or other cryptocurrencies. So very interesting articles for you today, and let's get started. So 3 reasons Bitcoin is turning into a global safe haven for investors. So China's recent currency devaluation seems in line with similar policies taking place across the globe. Let's take a look at why Bitcoin price is rising as a result and why investors are increasingly considering taking shelter in Bitcoin. So every fiat currency is devaluing itself on purpose as the US and other countries attempt to bolster economic growth through rate cuts. Investors are beginning to flock to gold, cash, government bonds, and increasingly Bitcoin as a hedge against inflation. So, in a Twitter thread, the former Goldman Sachs executive makes the case for why the world is fast approaching a currency crisis. So, we are at the moment conjuncture in the forex market. In my entire 30-year career, the dollar appears at risk of an uncontrolled rise, which could be pretty bad for the whole forex market. So Pat points out that the Fed broad trade-weighted dollar index is literally on the verge of breaking a massive cup and handle pattern at 130. So that's pretty crazy here. As you can see, this would be the cup, and here's the handle aspect, and that would signal that the price could go a lot higher. So meanwhile, the ADXY Asian dollar index is about to fall below a crucial trend line, and PAL says a fall of 20% or more across all Asian major currencies has brought the index face to face with what he calls the cliff of death. And that means here that it could fall below this trend line, which definitely wouldn't be that good. So JP Morgan's emerging markets currency index is also worse for fear we're on the verge of dropping to a new low. So all in all, this is not very good for the whole market. And sadly, we are at one of the biggest junctures for markets in history. You may disagree with my assessment of the odds. It doesn't matter, but you simply cannot ignore the risk. Bonds, dollars, Bitcoin, and gold. And if you've been looking at the gold and silver markets as of lately, they've increased dramatically in price over the last month. So that was probably a very good hedge against the traditional markets. And of course, Bitcoin is now a new asset class, which different investors can also put their investments into. So investors are becoming increasingly nervous as central banks have demonstrated they will continue easing. Late of last week, the United States Federal Reserve announced that we would cut interest rates, and less than a week later, China devalued its currency. And as you can see with this massive gap on the 5th of August, massive jump in the exchange rate between US dollar and Chinese yen. That's just pretty dramatic. So it's clear that the Chinese yen to US dollar outflow is influencing the price of Bitcoin, as the later is up to 14% this week. So pretty good, pretty strong correlation. And here's a nice correlation chart. So basically the green ones here show a strong correlation. You've got the X and Y axis. So on the X axis, you've got the different pairs or commodities, or actually also index. So here you've got BTC USD, Ethereum USD, different cryptocurrency pairs. Then you've got the S&P 500 index and gold, and you've got the same elements on the y-axis with BTC, USD, and so on. And this chart just shows the correlation. So basically, the closer the number is to 1, the higher the correlation is, and the smaller. So if it's less than 0, then the smaller the number is from 1, then it's a negative correlation. So also lower than 0 negative correlation. As you can see here, BTC USD, this trading pair, correlates negatively to the stock market index S&P 500, which is pretty crazy. Here you've also got different. So if you've got here, the BTC USD has a correlation, positive correlation, but still not as high with gold, but it's increasing. But I think it's a very useful chart to see the different correlations. Also, if you look at, for example, BTC USD correlates very strongly with Ethereum, but less strongly with BSV, for example, which makes sense. At the same time, the central bank of US and China are not the only ones racing to the bottom. Just recently, the Bank of Thailand reduced its rate by 25 points. At first since 2015, while Reserve Bank of New Zealand also introduced a 50 basic point cut, which came to a surprise to many investors. So Bitcoin can provide asymmetric returns. So for example, earlier this week during an interview with CNBC, Morgan Creek digital co-founder Antonio Pompliano discussed how Bitcoin will react to the current global monetary easing trend. So Pompliano agrees that China's devaluation is playing a large part in Bitcoin's current bull run. He also adds that institutions increasingly looking at Bitcoin because it has proven to be non-correlated and to provide an asymmetric return compared against traditional assets, non-correlated even with negative correlation to different index markets. So Bitcoin's becoming increasingly a macro hedge for investors against things that could go wrong. Rate cuts are adding liquidity. Liquidity is pushing money into all these risk assets and also hedges, which is helping Bitcoin, adding more volume into the market. Thing always is fantastic. However, the monetary policy and this upcoming financial crisis, I mean, it's to be expected, but it's going to have a lot of negative effects. People are going to lose jobs, and people are going to lose their houses. They won't be able to pay their mortgages. It's going to have a big effect on many people's lives. So that's why I mean, on one hand, I expect it to happen. On the other hand, it's tied with a lot of negative connotations. All right, so Bank of India. Oh no, actually, sorry about that. First up is bank accounts of country's top anti-corruption activists frozen by Russian officials. Something I feel strongly about. In recent news, bank accounts of a Russian anti-corruption foundation are being frozen by the government under the suspicion of their involvement in money laundering and tax evasion. Accounts belonging to the institution as well as the staff have been frozen. The foundation belongs to Alexei Navalny, and along with their accounts, they're also freezing accounts belonging to their regional offices. The organization's press secretary Kira Yarmis announced this news by adding that the accounts being frozen belong to officials of FBK who were identified as suspects for an ongoing money laundering and tax evasion investigation. Yeah, that's pretty interesting. I mean, of course, it's pretty bad, the aspect of money laundering, even though I'm not too fan of the fact that bank accounts get closed. But in this case, it's justified. Now, talking about India, this is a bit of a negative. I didn't really expect this to happen since, yeah, I think it's pretty negative news. And India will lose almost 13 billion US dollar market by banning cryptocurrency. So Siddharth Sogani, the CEO of crypto and blockchain research firm Krebaco Global Inc., believes that India will lose around 13 billion US dollars of market if cryptocurrency is banned in the country. So Sogani shared his reasoning with the news outlet, which reported the matter on August 8. According to the report, Krebaco's methodology included analysis of how much revenue companies might have generated if crypto was ruled to be legal. So, as per the report, Krebaco came up with the following figures as part of his total estimated revenue. So around 13 billion in total, 4.9 billion as indicated by crypto white papers and associated business plan, 2.1 billion from expert blockchain coders, 1.2 billion from content creators, and 4.5 billion from miscellaneous jobs. So they have to regulate it, because if they don't, it will raise a question of how they will implement a ban on a population of 130 crore people. That's 1.3 billion people. They don't seem to have the mechanics of doing that, given India is a country of 1.3 billion people. It's going to be very difficult to enforce this ban, but I don't like the direction that this is going. So government's panel proposed ban. So as previously reported by a governmental panel in India's officially recommended that the country ban cryptocurrencies on the 22nd of July. The panel further recommended imposing sanctions on any crypto-related dealings. So they have submitted this proposal. We have submitted several reports to the Indian government, as well as have consulted Ministry of Finance through presentations and report. In spite of all that, it was surprising to know the draft bill news. Yeah, this is just not good. This is not good. Not happy about this whole ban thing. Proposal, very difficult to enforce. And it's the same with the wave. They're going to just be left behind. And I think India is one country that definitely needs all the help they need to move into a direction that will help the population thrive. And at the moment, there's still so many people in India under the poverty threshold, unbanked, and I think cryptocurrency will help them move out of that, and not by just creating their own country's cryptocurrency currency. That won't work, as you've seen with Venezuela and petrodollar. I don't believe government issued cryptocurrencies are going to thrive and be part of future digital technological revolution, as will other cryptocurrencies that are decentralized. So still talking about India, should this ban pass, should this proposal pass in December, then there's a possibility of around 40,000 BTC that could flood the market, because people won't be allowed to have these BTC or cryptocurrencies in India, so they will have to sell it before the ban occurs. So overnight news emerged from a court case in India that the government will introduce the controversial Bitcoin ban in December to January. Amongst draconian anti-cryptocurrency legislation in the world, the bill will punish anyone who trades, mines, or holds cryptocurrency with up to 10 years in prison. I think that's pretty crazy. Of course, it's going to be very difficult to track everyone who has cryptocurrency, so if you just hold it and keep it, but it's still a risk that people have to be aware of. Are they willing to go to take this risk to still keep cryptocurrency? I wonder if people will still do that. So in the petitions praying for the ban or regulation, government submitted a draft regulation before the court, which was submitted to it by Garg community. Government requested the court to adjourn the matter to January, as intends to introduce the bill in Parliament in the winter session. Now, the thing is, ZPay is one cryptocurrency exchange, has around 2 million customers in India, who hold cryptocurrency in wallets on the exchange, or they have purchased cryptocurrency through the exchange. Now, the one thing is they've got limited options at the moment to turn the cryptocurrencies that they've purchased back into rupees, into fiat, and they're only allowed to send a certain amount of cryptocurrencies out of the country per year, so around 250,000 US dollars each year. So now SetPay has around 2/3 of the market, and SetPay accounted for around 2/3 of all cryptocurrency trading volume in India, and based on his inside knowledge, Khurana estimates the total amount of legitimate Bitcoin in light pools in India is around 40,000 BTC, with an unknown amount, probably around 20,000 BTC in black market, so dark pools. He says the total value of cryptocurrency in India would be around 1.5 times that of Bitcoin, and that would also hit the markets in the event of a ban. So all this Bitcoin and cryptocurrency would hit the market, be sold on the market, should the ban occur. Now, of course, not everything, because people might just be willing to take the risk of imprisonment and still keep the cryptocurrency because they might not be tracked. But the problem is, if they've bought it through this exchange, the government could request KYC data if this exchange has any KYC data. If it doesn't have any KYC data on customers, then those customers can probably just keep the cryptocurrency and keep it for the long term without too much risk. But probably a large amount of this BTC will flood the markets in the case of a ban. Now, there are split opinions on if this will affect the price dramatically in the winter season. And the thing is, like, if we looked at the amount of BTC that was sold during the last bear market due to Mt. Gox, then it could have a dramatic effect. But if it's split over many months, then the effect could be much less dramatic. So he points to the example of 20,000 BTC being purchased on 3 exchanges, around 7,000 BTC each, earlier this year when BTC was around 4,500 US dollars, which only pushed the price up 10%, so not that much. And so if that is the case, and we're talking about double of that, but spread across 90 days, it may not do much because the sheer volume, it may have a dampening effect on the mood, but not drastically crash the market. So maybe it has little effect on the market and just cause more sideways trading, but not actually any flash crashes because it's not being all sold at once. But the whole issue with India banning Bitcoin and cryptocurrency does dampen the mood on the fact that a country is willing to go in that direction and is scared about the technological and financial advances that cryptocurrency can have, and tries to go in the direction of having their own cryptocurrency. I think it's a path that a few countries are maybe deciding to go, and I think that's a bit scary. In the end, I think it's just going to bring a lot of downside to the country in itself. It will push them back in the direction of technological advancement in that field. It will just push them back maybe a decade, since they won't have this first mover as the advantage as other countries have, like Singapore, Switzerland, different other countries that are also pro cryptocurrency. Yeah, that's about it. So I hope you enjoyed this video, and yeah, if you've got any questions or you've got any feedback, don't hesitate to leave it down in the comments below. I'll gladly answer your questions. If you've got news articles you'd like me to cover, don't hesitate to send them to me, or I'll leave a mail address below that you can send some articles if you're interested. So I'll catch you on the next one. Have a nice one. Bye bye.